Welcome back. Joining me for a closer look at the day's markets action is Shaun Dendere from Trive Investments. Shaun, thanks so much for joining us today. So, there's been choppy trade when you look at global markets. The US markets are red at the moment. When you look at European markets, they're green. When you look at our markets, we're green. It just seems like we're waiting for, another market catalyst to kind of make big bets or hold off. Are those catalysts the jobs print that's out on Friday, as well as some of the commentary coming out of federal officials this week?
Firstly, thank you for having me. I think there's a lot of elements at play currently, right? I know obviously NFP is coming through on Friday, which, everyone gets a bit edgy from a trading perspective until those numbers come out. But there is also a massive political play in the United States. As we all know, we don't know what President Trump can say on any given day. So that's really keeping everyone on edge. Potential trade wars via the tariffs, what the Fed is saying. From a local perspective, obviously we had the GDP print, but it was quite interesting to see how Asia actually did really, really well today, as opposed to, yes, the Euro market also did quite well, as opposed to if we're looking at the local market and the American market.
Do you think? Okay.
Yeah.
Do you think we're just, benefiting on the back of the rally that we saw in Asia today?
Yes, 100%. I think there is a bit of a knock-on effect from the Asian markets. What I've noticed is that when the Asian market tends to perform quite well, the Aussie also tends to do relatively well. There is some form of correlation, not scientifically proven, but there is definitely a correlation there. But if we're looking at South Africa as well, I think trading has been muted due to that GDP print that you did mention earlier. Expectations were quite high. High in context of South Africa.
Yes.
But we came in significantly lower. But I don't think that the market overreacted to that. Because if we look at, the way the economy is at, there is a lot of positive sentiment in the South African market. You spoke about the REITs earlier. Year to date, up above 30.something%, which is great. More political stability, no load shedding, etc. But that GDP print really was affected purely by agriculture. I think that there is a drought of sorts, which is really affecting that, that bottom line number.
One thing that's been quite volatile in comparison to the local bourse that we've been seeing making gains is the rand. We've seen the rand really volatile post, the Trump victory, and now we have this GDP print also added to it, as well as Trump's threats of 100% tariffs on BRICS nations. Are we just seeing that filtering through and just weighing on the rand even more?
I technically think that it really is dollar strength. So if you look at the dollar index has been going pound for pound every single day. The dollar is currently really strong, and that is really weighing hard on, the rand. When we've been speaking the past 2 weeks or so about the Trump trade, eventually the Trump trade will hopefully taper out, and then we can see the rand starting to recover as we're going into 2025.
Shaun, it seems like Trump tweets and we all just freeze.
110%.
Let's move over.
Very volatile there.
Yeah. Let's move over to some company news. Exxaro warning of a fall in thermal coal production, citing the usuals, of course, lower coal prices as well as logistics issues. Meanwhile, it's still eyeing growth opportunities, retaining funds of up to 15 billion rands for M&A activity. What have you made of that update?
I think that, in terms of Exxaro from a coal perspective, the numbers were expected.
Yeah.
But I do believe that, them building up that cash reserves currently sitting at 16 billion, for them to diversify their holding would really do well for them. Because I know they initially looked at copper, they looked at, there's another, commodity.
Manganese. I think there was a manganese deal that fell through.
Yes. So, but they're actually looking to go into manganese again. So that So once they start diversifying, I mean, Exoria did historically used to do quite well. I would believe that, there is an opportunity for growth. However, we need to also note that there was also a lot of shifts from a management perspective. So what happens from a management perspective, we need to keep an eye out to see what the outlook looks like, despite them having, all these ambitions going forward.
And then we have fintech player Capital Appreciation out with half-year numbers today. Revenue ticking higher, but that not totally filtering through to the bottom line as HEPS were under pressure. Is this a counter you perhaps look at?
Not technically speaking. I mean, I did come across it. Their numbers were quite interesting in terms of, obviously, as you mentioned, their revenue was up, but almost everything else was down.
Yeah.
But they attributed it to the fact that one of their deals came to the contract ended. So I think that really affected their bottom line earnings. And they also cited the fact that the economy has been quite tough for them. Therefore, those numbers will be affected by that. But I do see that they do have quite a strong free cash reserve, about 300 and something million there, which they're looking to deploy, in different products and innovation and projects. So based from a revenue perspective and taking into account everything that's happened, I do think that, there is upside opportunity there to look in. And I think it's also quite a cheap stock for, an individual that's looking to, let's call it, play around in the market.
You seem a little bullish on Capital Appreciation, but I do know that's not your stock pick. So what are you picking today?
So my stock pick will be the Mighty Boxer. They obviously listed. It is the largest listing IPO since 2018, which is quite a positive sign. We've seen a lot of companies delisting on the JSE, but with Boxer, obviously there's no historics there. But it is quite a solid play from them. I think there was, about 350 million investment from the IFC in their shares in order for them to boost them up. And they really want to compete, with your ShopRite, your USaves, etc., to just try gain market share. So over the long term, I really do think it is an interesting stock to watch, especially with, the current environment that we're operating in with low GDP, high unemployment, and so on and so forth.
Shaun, thanks so much for joining us and sharing insights on the day's trade. That was Shaun Dendere from Trive Investments.